Welcome back. Canada's federal pension fund is one of the largest in the world and stable for a couple of generations. Here's what you need to know. The Canada Pension Plan was founded in 1965 to address poverty among seniors, with a target benefit of 25% of a worker's average lifetime earnings up to a maximum amount. At first, benefits were supported by current worker contributions, but the aging workforce made that untenable. So in 1997, the plan was amended, with contribution rates doubled to 9.9%, paid by both employee and employer, and a reserve fund created to help cover the fund's growing liabilities. In 2016, benefits were increased up to 33% of lifetime earnings, and the maximum was raised to $20,600. At the end of fiscal 2025, the fund had $714 billion in assets and a 10-year annualized return of 8.3%, generating $355.8 billion in income. The fund is stable for the next 75 years and is projected to grow to $3.5 trillion by 2050. By the end of 2025, 12% of its assets were invested in Canada, 47% in the U.S., 19% in Europe, 17% in Asia Pacific, and 5% in Latin America. As of January, a newly retired person received $899.67 on average, and the maximum monthly amount was $1,433 per person. When it comes to the CPP, most Canadians care that their pensions are safe, but the fund is also a major player in the world of investing and has a fair amount of clout. John Graham is president and CEO of the CPP Investment Board. Thanks for being with us.
Thanks for having me.
So let's start with the overall notion of safety. We know from an actuarial point of view, it's been deemed safe for 75 years. When Canadians think about the CPP, how do you think they should think about it? Is rock solid?
Yeah, absolutely. And as you highlighted, the Office of the Chief Actuary comes out every 3 years with a review of the plan. And CPP, as of the last review, is sustainable for 75 more years, which is actually a remarkable achievement if you think about the pension systems around the world. And Canada has one of the strongest sustainable pension systems, one we can all be very proud of.
And of course, it took some doing to get there. Are there likely to be other changes? There have been these two amendments over time, last one back in 2016. Do you think that, under your management, we might see the size of the benefit increase or the size of the investments put in increase?
Well, that really is a question for policymakers. The provinces and the federal government really decide the contribution rate and the benefits. But as you highlighted, it's been 25 years, just over 25 years since CPP Investments was created. First check came in, $12 million. As you saw, we just announced $714.4 billion. Mm-hmm. So I think a tremendous success story, and we'll continue to manage that money in the best interest of Canadians.
So on that front, the long-term return of the CPP, I think your most recent report has it just about 8% over a 10-year period, which is certainly healthy enough to match your liabilities. There's no doubt about that. One wonders, of course, John, with a fund of this size, whether it gets harder as you go to find investments because you've got such a big pool of capital.
Yeah, so our 10-year returns are 8.3%. And I think one of the stats we're most proud of is since inception of CPP Investments, $492 billion of the $714 is from cumulative investment income. But you bring up a good point around going forward returns. Now, we actually view scale as a comparative advantage, and we've built out a global capability to be able to invest in all the big economies and all the big asset classes in the world. But as we look forward, we certainly do view that across the entire globe, investment returns are going to be harder and harder to come by, and we're going to have to fight for every basis point, and we're going to have to look to continue to contribute alpha to the portfolio.
And on that front, as a major investor, obviously you'll be watching the U.S. and its trading relationships closely. And I wonder what your thought is about the long-term shift in, and I'm focused here on the public market, so the stock market of the U.S., people talk about a multiple reduction. In other words, just a change in the value of stock markets there that might change our thinking long term. Can you look through that, or is that something you need to think about over the next 5 to 10 years?
Yeah, the U.S. has had an incredible run. You can see our portfolio, even our U.S. exposure, has grown over the past year because the U.S. has delivered really strong returns. Mm-hmm. U.S. today is about 70% of the global capital markets. We have kind of mid-40s of the portfolio in the U.S. We actually are pretty comfortable with our allocation to the US right now. We continue to believe it's important to be diversified globally. It's important to continue to have exposure into the US. It's a big liquid capital market. And at our kind of allocation, we're pretty comfortable.
There is always political pressure, but seems like new political pressure to ask the big pension funds in Canada to invest more of your money at home in Canada. What do you think about that kind of sort of allocation requirement?
Well, we're always looking for opportunities in Canada. One of the things I highlighted in my CEO letter in the annual report is we have 114 billion of gross assets invested in Canada. And we have teams that are dedicated to looking for more investment opportunities in Canada. We have an appetite for Canada in the portfolio, and we're actually really encouraged, and we're really, frankly, excited about some of the potential for opportunities to invest in large-scale infrastructure, energy, oil and gas, pipelines, renewables. Some of the discussions that are happening at the policy level, we think this is going to generate some really interesting opportunities that are all consistent with where we started the discussion, and that's ensuring that the CPP is sustainable for another 75 more years and really driving great investment returns.
So open to investments here, but how would you feel about a policy mandate that you invest a certain proportion of the fund in Canada?
Yeah, we are, as we've always looked at it, we're a pension plan. We were created 25 years ago to solve what at the time was an issue with the plan. And over that time, as I mentioned earlier, we got 12 million as the first check. We have 714 billion today. And our mandate as enshrined in federal legislation is continue to maximize return without undue risk of loss. And we'll continue to do that for the 22 million Canadians that look to the Canada Pension Plan.
One of the things, of course, that changed, and it may have prompted that increase in benefits back in 2016, is the number of Canadians not covered by pension plans through a company, a private plan. Could you foresee a scenario where the plan should be broadened, where it should welcome self-employed, where it should up the benefits? In other words, kind of I know that you'll say this is a policymaker question, but would it make sense, given the size and value of the income you're able to generate, to be more generous with Canadians?
Yeah, I think you anticipated my answer on that one. Is when it comes to setting the contributions and the benefits, we look to the provincial finance minister and the federal finance minister, and we are here at CPP Investments to invest the funds that they give us, consistent with the mandate they provided us. And as we highlighted on the performance, I think we've done a pretty good job.
You have done a pretty good job. I think second in the world. You certainly have a lot of clout in the world, given the size. You mentioned that you have, decent exposure to the U.S., but just under half of the assets are focused there. Can you see that shifting as you look ahead? Are there other regions where you would expect to grow exposure?
Yeah, it's a good question. And I think we're always looking at our geographic exposure. We built out a global portfolio, and there's a lot of volatility. There's a lot of kind of uncertainty or instability in the markets today. But as you think about investing, if you're going to pull money out of one geography, you got to put it somewhere else. Mm-hmm. And if we back up and look at some of the impact of this volatility, we think it's going to impact global growth, and it's going to, and everybody is going to feel that impact on global growth. So we are looking at our geographic allocation, but we see that this growth impact will be global. And where we sit with the U.S. right now, based on the size of the market of being such a big part of the global capital markets, very big liquid markets, sitting in the mid-40s is somewhere we're comfortable with. It may ebb and flow at the margin, but I wouldn't expect any big changes.
All right. Unfortunately, we got to leave it there, John. It's great to have you with us for this.
Great. Thank you.
John Graham is president and CEO of the CPP Investment Board. Coming up, do Canadian steel producers need a new market much closer to home? That's still ahead.